Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment for June 15th. Well, there's a lot coming up on the schedule. There are a whole slew of U.S. indicators out today. The PPI, the Empire State Manufacturing Index, industrial production, and the weekly oil inventory data. Those are the main ones out of the U.S. today, but of course they're all going to take a back seat to the FOMC meeting, Federal Open Market Committee meeting. While it looked a few weeks ago like committee members were preparing the market for a rate hike, now that seems to be off the table following the very weak May payroll figure. Now the focus will be on the famous dot plot, which shows where the committee members expect rates to be at the end of each year. Will they still forecast 2 rate hikes this year? And what about the 4 rate hikes that they expect next year? The dots remain far above where the market expects rates to be. For example, the committee's expectations for end 2017 rates have come down steadily over time, but they're still over 125 basis points higher than what the market expects. That's 5 rate hikes difference. Not only did the May payroll figures show far fewer jobs than recently, but also inflation expectations have been moving lower recently too. That makes it hard for the Fed to explain just why they want to hike rates right now. As a result, I expect Chair Yellen to be fairly non-committal. I don't expect her to rule out a rate hike this year, but I don't expect her to be explicit about when it might occur either. At the end of the day, I think that while the 2016 dots, the dots for this year, may remain the same, the 2017 dots will probably come down significantly. Though that would only bring the Fed closer into line with the market, nonetheless, I expect that could hurt sentiment towards the dollar. Overnight, we have the Bank of Japan meeting. Although a few commentators are looking for them to increase their monetary stimulus, I think it's more likely that they'll just hold pat at this meeting. The government just recently announced that they were not going to hike the consumption tax next year. On the contrary, they said they'd come up with yet another fiscal stimulus package sometime in the autumn. So looser fiscal policy should mean somewhat faster growth than expected, and therefore less need for monetary policy to be loosened further. I think they'll wait to see how things turn out. Finally, the Swiss National Bank is also likely to remain on hold that's early tomorrow morning, since their main target, the Euro-Swiss exchange rate, has been fairly stable for some time now. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.